Alrighty, what's going on, everybody? Happy Tuesday. Happy Tuesday. Hold on, bear with me 1 second. Close this out. Alrighty, there we go. So, how is everybody doing? All right, there we go. There we go. Can you guys hear me okay? Let me know if you guys can. Just perfect. Alrighty. And if you hear the damn yapping dog in the background, my apologies. It is what it is. All right, so let's dive into it. We have some really good price action setting up. We've got I would say one monumental fundamental news release coming up in less than 24 hours. And we have the Bank of England releasing their bank or their rate hikes as well. So let's dive into it. Let's see what's going to happen. I can kind of give you my bias on both ends of it. I'm personally not going to be looking for any plays tonight. What I'm going to be doing is holding what I have, what I got into today, holding what I have, and then essentially waiting for the release tomorrow. All indications for me are that they're just going to come in with the 25 basis points as forecasted, and I don't think that's going to change my bias. Now, if they do come in and pause rate hikes, at that point, I'm going to turn bearish US dollar. And of course, if I think it was, I want to say it was either Morgan Stanley or, you know what, I don't want to misspeak, but there was two large institutions that their analysis is betting on a rate reduction, which I personally don't think is going to happen. I think what we're going to see out of the Fed is just the status quo. They're going to come in with 25 basis points, which if you go back to like 2 weeks ago before the whole banking fiasco and these bank runs started, all indications were actually leaning towards a 50-point basis increase. And obviously I can almost guarantee we won't see 50. That'll be counterintuitive to securing the banking structure that they're trying to attempt to do here. So let's dive into it. It's now 25, right? Yeah, I mean, that's what they're forecasting. So we'll find out. But yeah, 25 basis points is what the forecast is. And I want to say, like, of all the models, analyst models and everything, I think it's something like 88 or 87% of it is in agreement with that. So yeah, let's dive into it. Again, the two big releases I'm looking at this week are going to be coming out of the dollar and coming out of the Bank of England. So for me, GU, EU, and Euro GBP are very significant. For those of you guys that watched this morning during New York session, the Canadian inflation numbers came out, which, yeah, I mean, you know, the month over month actually saw 0.4% of a percent increase. They were forecasting 0.5%, which, you know, if you want to say, well, okay, it came in under forecast, yeah, but that still shows from last month to this month. Remember, Bank of Canada has paused their rate hikes, so they still came in 0.4% with an increase. And year over year, you know, they saw a 4.9% increase, 4.8%, and under common, and all these, like, you can look under what all these actually represent. But this is still showing that inflation is very much an issue in the Canadian, in Canada, and under the Bank of Canada, where their initial, I guess, reaction to this was, yeah, we're going to pause rates. I think now they're going to find themselves in a very, very difficult place, between a rock and a hard place, because now they're going to have to play catch up on this. But if you looked at any of the Canadian, specifically Canadian futures, if you looked at UCAD, there really wasn't a significant move. So I'm still looking bullish UCAD. I'm waiting, and we'll kind of dive into it. I stopped watching UCAD probably this morning around like 9:30, 10. So I'll look to see what it did the rest of the day, and I'll kind of give you my outlook on what I'm looking for. So Euro going nice and bullish since accumulation last week Friday. Okay, yeah. Yeah, I tried hedging a buy-in, but this morning when I got up, but she never came back. So I'm actually in shorts right now. So um the pound is also going for 25. Yep. Yeah. Yeah. So and I'm pretty sure we're gonna see 25 basis points on coming out of the Bank of England. So, we've got on tap tomorrow at 2 p.m. FOMC coming out, right? The original at 2 p.m. Eastern, the initial shock is going to come out. And then obviously the press conference is where I'm going to make my money. So you're bullish UCAD, but in a temporary short. Oh, I got you. Sounds good. Um, and then Swiss Bank, I really don't care what's going to come out of the Swiss Bank, but Swiss Bank is calling for a 50 basis point increase. I'm personally not looking at USHEF at all. So, and there's really no Swiss Bank pairs I'm really looking at. So this really isn't going to move anything of my bias out of the way. But we do have the pound Thursday morning. New York Open is going to come out, and again, they're calling for 25 basis points. So, um, what you got, bro? Euro USD. Yep. Yeah. I'm in that distribution right there. So yeah, we'll see if it holds. But yeah, I'm very much looking for the shorts on it. So, but yeah, we'll take a look at it. Okay. And then of course to end the week, right? To end the week, we've got a bunch of just inflation numbers. We have a bunch of inflation numbers. So, it is what it is. We'll see how she plays out. Is It's Asian, wouldn't look to sell it now personally. Yeah, I'm not looking for a sell right now either. I'm not looking to get into a position at all until after FOMC. So, but yeah, we'll see how this all plays out. But the two big things I'm looking for are going to be those central banks, what they're going to be releasing, and of course, if we do come in with the 25 basis point up to 5%, I'm going to continue to be bullish US dollar, right? Nothing's going to really keep me from looking for bullish US dollar on that. And I know 50 basis points is out of the question at this point. Fundamentally, the Fed's not going to try to handcuff the rest of the banking district out of this. So yeah, so we'll dive into it. Let's take a look. And of course, on the indice front, right, I'm still very, very much bearish, bearish, bearish. I did work in a US 30 short today during New York price action. So we'll kind of go through that and kind of give you my idea what it's looking at. What about a 4-hour change of character on the DXY? 4-hour change of character on the DXY. All right, let's see. 4-hour change of character on the DXY. 4-hour change of character. All right. So maybe our definitions of change of character is a little different, but I mean, I'm not quite sure where your change of character is. Not this one. Okay. So where? The daily. All right. Well, you said 4-hour, bro. Let's see. Now it's just the test. We also made change of character again. Yeah, I mean, for me, I'm bullish. I'm bullish from here. Um, Technically, this accumulation is what started the whole thing for me, and that's going to be my slingshot. And we took out supply right here, so I'm ready to start. I'm ready to start buying out of this, and especially fundamentally, everything that's going on with yield curves and everything that's going on with rate hikes. If the Fed continues, they're hedged in. I mean, that's exactly what this has been right here. Is a perfect hedge. They're hedged in on both sides of it. So if for me, it's pretty easy. Rate hikes continue. This is going higher. Me too bullish, but because of the change of character interstructure, I'm looking for more push lower to 71 to 88 retracement. That's why I'm looking at. Yeah, sounds. I mean, trade your thing. I could tell you right now, if the Fed comes in and raises the rates, nobody cares about a 71 to 88 retracement. It's going to just go like this, you know, just like we never saw just like we never saw real big pullbacks on anything else. It's just not going to happen. So yeah, for me, I'm only looking for buys on the dollar as long as globally inflation continues to strike. Um, and we go from there. So yeah, on the dollar front though, I mean, I'm going to play the short game right here. And this is what I've been waiting on for a minute, was for us to come right in here, which we've seen that. She missed my alert by a hair, which I'm still hoping we get a little lower. I'm hoping that, maybe we can probably come down into like this. This is the candle that I want us to come into, because this was FOMC right here. So I want us to play into this candle right here. So anything in here gets me to start looking for buys. And if I start to see an accumulation tomorrow going into the rate hikes and they go ahead and do the 25 basis point, I'm definitely playing mitigation or continuation move from that. So, it is what it is. We'll see how she plays. I'm not going to be long-term buys. I mean, you could see here, I was trying to hedge in this redistro here. But at this point, if we end up going higher, then this down here is done for me. I could care less about it. We're just going to continue to go higher with it. If we don't take out this high and we actually play into something here to come lower, then it works out even better, because I want to play into the more probable location that I want to play out of. So that's really how I'm going to be looking at it. Good old fashioned line chart, clean falling wedge into a key zone and printing bull. Let's see what we got. Yeah, I mean, for me, this was the pivotal FOMC move that got all of this started. So I do like how they're playing into it. So we'll just see, and obviously this would be the more practical. Fundamentally, if there's a reason for us to get down in there, I don't think this holds, because at this point, what'll get price to continue to go lower, it's going to be the Fed either pausing rates or reducing rates. And I don't see them, if they pause rates this month, I don't see them coming out and doing it. Well, I don't see them raising rates until they get more data on the inflation front, right? So the Fed doesn't care about the labor market right now, right? The labor market is something after the fact that they'll work on. All they care about at this point is what's that inflation number. If they can start to see inflation lowering, which to this point, numbers don't support that, right? Every month, inflation just keeps creeping up higher and higher. So this is where I just want to see what we're going to do with it. Like we're on for me, it's like a ticking time bomb. So you're either going to diffuse the damn thing or it's going to go off. And if, especially going on with the bank runs, going on with the vulnerabilities that some of these regional and smaller banks kind of put themselves in, the Fed is not going to try to go out of their way to cause a catastrophic like domino effect. I'm sure you've heard the word contagion on all these like business shows and stuff. I mean, that's exactly what would be a contagion, right? You've got a large amount of withdrawals happening, and it's just going to domino around, essentially collapsing the banking sector, right? Yeah, it is absolutely. So that's in my opinion, right? In my opinion, and this is, I mean, who am I, right? I mean, I'm just a regular Joe Schmo. Did I study some of this in college? Sure. But, do I consider myself an economist? Hell no. If you just use common sense, what the central banks right now are doing is they've got they're burning the midnight oil by printing more and more money in order to add not only a financial, right, because it's not only a financial um uh area to what inflation is doing and what these banks are doing, right? But it's also the confidence level that they're trying to instill. So they're going to go out of their way to really try to double down on that. But an effect of what's going to happen is, yeah, inflation's going to get worse. So, it is what it is. What do you think about gold with these things? Wait, what do you think about gold with these things? I mean, I'm personally not doing anything with gold. Um, yeah, I mean, yeah, I'm not, I don't plan on doing anything with gold. Like fundamentally, do you think that right now as a means to protect investments, are you saying that investors are going to flee to precious metals like gold? I mean, I think 10 years ago, 15 years ago, 20 years ago, I think that was the standard, right? Safe haven, put your money in gold. I don't think that is right now. I mean, as it stands, I looked at what the 2-year treasury bond is still at like 4.175%. I still think that's a better safe haven than going into precious metals. I mean, think about the appreciation on gold over the last 24 months. Have we seen that significant return? And I don't think the answer is yes. I think it's actually no. So this is what let's see, they printed another 5 billion today. Yeah, bro, the printing presses don't stop, man. They don't stop. Yes, no, stagflation, absolutely, man, absolutely. So this is what I have with what I mean, the 4-hour change of character. Here you can see it cleaner, the 4-hour change of character. So you're talking about at 103, 4-hour change of character. Why is this a change of character though? What is that? Like, what does that low represent? The leg low? But that's not a leg for me. Yeah, that's not a leg for me. So let's see. You're talking about, what was it? You're talking about August 15th at 105. You're talking about 105 here. Oh, let me hide all this junk. So you're talking about that right there. That's not a leg for me. Yeah, because you don't have a completed market cycle. So yeah, I mean, don't change anything because I'm saying it's not for me. If it's for you, then do it. But for me, that's not a structure break. Yeah, so yeah, that's not a structure break. That's the equivalent of, well, I mean, heck, that's the equivalent of this right here, like saying this right here, saying that break right there, because this is what made that right there. That's, for me, that's not a change of character. That's not even maintaining structure. This is the origination that caused this break. If this is your previous high, this is this is the new high, previous high over here. That's what's maintaining my leg. So yeah, that's not a leg structure for me. Yeah. Well, I think we have just different definitions of what a change of character is. So, I mean, for me, this is just a break of order flow. For me, I'd have to look at what makes dollar bearish? Well, it's got to take out bullish structure. So where's your bullishness from? Well, I mean, if this is your new high, where's your previous high? Your previous high is here. So where's the low that's maintaining it? So I'm bullish dollar until we take this out. That's how I look at it. Yeah. Yep. Yeah. I mean, I go by the definition from a market cycle perspective. I go by the definition of a I'm trying to word it so that it doesn't make it seem like, yeah, I mean, I use a different definition. Change of character means a little more, and it goes into who's in control of the market, buyers and sellers. So like if I were to do this, if I were to say that we are bearish, and then we go, let's see, and then we go and do this, and then that, I'm not bullish because of that. We're still bearish from here. So just because this isn't a change of character for me, yeah, that's all good. No worries. Internal, extra. Yeah, I mean, I don't get into those tongue twisted things, bro. For me, like I've heard people say internal, external structure. Then you have internal, then you have external within the internal of the external on the outside. I mean, yeah, no. I mean, I have leg structure and then I have order flow. That's how I look at it. So, gold against the weakest currencies was the play. Gold is all-time highs against most other currencies than the dollar. Yeah, I think like gold against the Australian dollar. I haven't looked at XAU, AUD in a very long time, but I can only imagine how damn bearish this thing is. I can only imagine. Let's see. Yeah, look at that thing, man. Look at that thing. It is. I mean, I'm sure the Kiwi's even higher than this. I'm sure if, let's see, what was the percentage yield on? So that was a 37% increase, man. 37% increase. That's ridiculous. But yeah, I mean, this is why I've been so bearish Australian dollar and Kiwi, man. Yeah. Uh, yeah, exactly. Yep. Yeah. Pretty much. Yeah, I'm looking for the longer term play, man. My days of like scalping and looking for short term internal stuff, man, are long gone. I don't like risking that large amount of money on those plays. So yeah, yeah. All right, cool. So anyway, dollar. Let's get back over to dollar. Oh, all right. So on the dollar, right? On the dollar, again, the bias for me is pretty clean. We either going to do one of two things, and I'll tell you right now, I personally, if they come in like the scenario I can see play out, if they come in at 25 basis points, I personally feel like we're going to see price come up into here and then drop down into the area where I'm looking for the buy before going up. If they come in with zero, right? If they do a pause, I can see price ultimately shooting down first. They're going to accumulate. They're going to come back into this, and then we'll see the next leg down. And then, of course, if they come down with negative rates, this thing will just flat out just collapse. That's ultimately how I see dollar playing out against this. On Euro futures, it broke the high. On Euro futures, it broke the high. What broke the high? Yeah, on Euro futures, what broke the high? This right here. Talking about that. The FOMC candle. Let's see, the FOMC candle. You're talking about this one? Oh, you mean it broke the FOMC candle? This right here. Yeah. Okay. Yeah, I agree with you. So what is that? How does that change the structure though? What would you consider as a safe haven currently? Well, I mean, let me ask you a question. What is every major bank in the world? What kind of money do they hold in their vaults? Do they hold euros? Do they hold Russian rubles? Do they hold what are actually what is every central bank stockpile? Yeah, the greenback, right? I mean, for me, that right now is the ultimate safe haven. The ultimate safe haven. So, and if you think about it, right? I mean, hold on, we'll go back to this. Hold on, I'm going to write this down right now. Hold on, safe haven. I'll kind of give you why this is the ultimate safe haven in a sec. Hold on, let me just catch up. Hold on. So, this is what you have on gold. Hold on, let's see. So we'll take a look at gold. Yeah, my only issue with gold. Oh, we'll go over to gold. We'll talk about gold. I have a small issue with gold, but we'll talk about it. Let's see. You're only playing pro trend, but I take great setups today. Great buys on Euro USD. There was a good buy out of Frankfurt. I missed it. I was looking for the buy. Yeah, I was looking for us to come back and break into this, but yeah. Um, let's see. Can we consider Euro futures is the leader of Euro right now? Euro futures is the leader of Euro right now, as opposed to being the laggard, you mean? So, hold on. Euro leader. We'll talk about that in a sec. Metals and bonds. So let me ask you a question. Right now, is bonds the safest place to put your money? What do you guys think? Is bonds, our treasury bonds, the safest place to put your money right now? Yeah, I agree. 100%. Absolutely. So if the entire world right now went out and bought a 2-year treasury bond, what would that do to the US dollar? Yeah, absolutely. It's going to pump it. So that's honestly one of the reasons why the greenback is the ultimate safe haven right now. It has got a, not only does it have, is it a treasury bond? So it's government backed, right? I mean, not saying that there's a lot of probability in some of these central banks collapsing or governments collapsing, but I'll tell you right now, if the US government collapsed, there'd be more to worry about than where I put my, couple $100,000 worth of treasury bonds, but yeah, it is 6-year and 10-year. I don't know about the 6-year. I'd probably, I mean, definitely the 10-year, definitely the 2-year. And then even if you want to go short term, the 6-month, man, 6 months on fire. But I don't know about a 6-year. Anyway, all right. So is that only seen as divergence then? And on Euro USD, since it hasn't broken, that's still being a POI. No. So just remember this, right? Like when you look at the futures markets, right? All right. So first and foremost, why would we see, okay, well, let me ask you this. When did, because I don't know the answer, so hopefully somebody does. When did the most recent Euro futures contract expire? Anybody know? No idea. Well, who asked the question about Euro futures? When did the Euro, when did the Euro, most recent Euro contract expire? I mean, I kind of have an idea, but I don't know the specific date, but I'm going to go out on a limb and say it was this week. I'm almost positive it was this week. Let's see. So, my bad. It was last week, March 13th. March 13th was the most recent. So, all right. Now, let's look at the dollar, because I'm almost positive that's why it broke the high on the futures, because it's got to average out the price. So the dollar doesn't expire. No, where is, so it was December. This has got to be a typo then. Yeah, that's a typo. These idiots, bro. It's got to be a typo. Um, so the dollar was right, because it has to be. We go, how do we go March of 24 to June of 23? Yeah. Anyway, so March 1st was the contract expiration on US dollar. So my best guess is this right here, this move here was them averaging out price. And in fact, it doesn't break this. Yeah. Where do you purchase bonds? You can buy them online right now. You can go just type in, US government treasury bonds, and there's all kinds of brokers that you can purchase it online. It's not even a broker. It's like, think of it as a gateway into it, and then you can just purchase it and get the electronic copy of it. Yeah, yeah. They're very, very easy. I purchased a couple over the last like 3 to 4 weeks. So yeah, I mean, it's heck. There's even some you can do with Apple Pay. So, and it'll be, you can do it. You can't do it with a credit card, but you can purchase it with like a debit card, or you can just do it. How I do it, I just link my bank, and they like, most of them use like Plaid and stuff. So you just link your bank account. Even with FOMC candle, why would that still be a POI on EU if it broke? Because I don't believe it broke on the futures chart, is what I'm saying. Yeah. I don't believe we broke on the futures chart, because what you're getting is on this here, right? On this here, you're getting the current contract. Okay. The current contract on the front end of this. You're not getting it split. So, like, if I were going to go, let's see, hold on. If I was going to go and do, what's the ticker? The ticker was 6EM. So let's go to 6EM. 6EM. Oh, they don't have it on here. Let's see. They don't have the old charts. Yeah, I would want to see what where the March one ended, because I'll give you an example, right? Hold on, I'll give you an example. So on equities, if you come over and if you look at what's happening here on S&P 500, right? You notice how S&P 500 is right here like this, right? We're in the area where I want to sell it. But if we go over to the most recent contract, you see how different the price action on the most recent contract is here? It's because the contract ended this week. And when the contract ended, they had to overlay a gap, right? So where the most recent contract, and here, we'll go back over and we'll look back at 6EM. And we'll first look at the June 2023 contract, right? So June 2023 contract is sitting at one, and I don't even know if it's going to be accurate on here, but this is sitting at 108,265. But now, which makes no sense because it doesn't give me the monthly contracts. It's just giving me what the yearly one is. So if we go to the June 2024 contract, look at well, yeah. So I want to see the monthly, but the 2024 contract is at 1.08105. So what happens is when the contract expires and they move to the new one. So like say right now, hypothetically, let's say that we're moving from today is this contract to tomorrow would be this contract. You're going to see a gap down in price. Does that kind of make sense? So that's why I'm not entirely believing that Euro Futures has broken it. I think it's just the contract that has gapped up. So I'm not too worried about it. So you just play price action as if it didn't break it. Yeah, because we didn't break it. It's just it was the futures contract. So you'll see it average out. It'll take a couple of days, but they'll eventually average it out. They use they'll use bots to average it out. Yeah. Yeah. So, but I mean, for me, this is as long as dollar, right? As long as, and I haven't, let me see. Yeah, as long as dollar hasn't broken this low, if dollar breaks the low, then I know it's no longer valid POI, right? So that's how I'm kind of looking at it. Do you know what difference is between the futures and the currency baskets? So futures is the future contract, and then like the EXY is just the index. So the index is taken from the futures market, but you're going to get a bunch of like gaps, right? Because it's only going to it's only going to show. So like if you go over to EXY, yeah, you could see it's only the data taken out of the future. So this index is comprised of all of the futures markets, but only traded during that session time. So that's why you have all these gaps. That's all. So for me, like the true market is going to be the contracts, not the index. Yeah. All right, cool. All right. So going back to the dollar, I mean, that's pretty much where I'm going to be with it. I don't think we're going to see a lot of movement over the next, like, say, we may see a little movement in the next 12 hours, but I don't see a huge amount of volatility coming in until FOMC release. That's how I'm looking at it. With the bank crisis, will the DXY drop? So depends on like, I guess, what bank crisis you're anticipating. I mean, if you're anticipating another bank run, I think they've solved that issue. I think they've restored a little more confidence, and you've got some of the larger banks that have already said that they're going to bankroll any of these smaller banks. You know what I mean? They've already said that they'll buy up the debt on it. With where the DXY is, does it look bullish like buy right now with how other currencies pairs look like? All right, so wait a minute. I'm a little confused on the question. So for me, trading specifically DXY, the only currency that right now is being driven by the US dollar, well, definitely Euro USD is going to be the only one that I would give any probability to. UJ, I think, is starting to show signs of dollar influence more than the yen. But when it comes to UCAD isn't being driven by the dollar. It's being driven by the Canadian dollar. US dollar Swiss franc is being driven by the Swiss franc. That's why even though I've been kind of just pausing what I'm doing with EU because of the dollar, that's why I've continued to be shorting AU and NU and like ACAD and NCAD because they're being driven by the Australian and the Kiwi dollar. So is dollar a buy right now for me? No. I either need us to, at minimum, take out this small redistribution supply area at minimum. And even then, I'm going to be waiting for evidence of buyers coming into the market, or I need us to come down into this area here. So is it a buy right now? No. At this point, we're still in the pullback for me. It's illegal here in Europe to go start a bank run. It's illegal for you to go withdraw your money. What? It's illegal for you to withdraw money out of a bank? What I guess country law is that? And why is it a law? So how do you know it's illegal then? So if you wanted to change banks right now, how would you do it legally where you're at? But you can't withdraw it. What? He had a friend that went to pull 100K out and the bank said no. Well, I mean, I could tell you this, like if you want it in cash, that's going to be difficult because a lot of banks don't hold that much cash on hand, but I mean, you can definitely transfer it out. And that's what these that's honestly what all of this started on, was just transfers out. Same in Australia, anything over 10K, you get asked to, no. In the US, if there's a transaction over $10,000, because it's an anti-money laundering FinCEN regulation. It's worldwide. But you just fill out the information, But I mean, it's the banking industry is regulated, but for them to say it's illegal for you to withdraw your money, why would you put money in the bank then? That is crazy. Yeah, I mean, they can get, now if you read the fine print. I mean, I know like my bank, anything over $50,000, they have up to 72 hours to honor the request. So you may not get it right away. They can stall it for 72 hours, but it's not illegal. Yeah. Not illegal. They can't. Well, I mean, that's what he said. He said it's illegal. Yeah. I mean, illegal to me is you've committed a crime. So if you're trying to pull your cash, I mean, I don't even understand how that's possible because you're being deprived. I mean, technically, what the bank is doing is a crime. It's theft. It's depriving someone of their own property. It's and shoot, it's over $300 in the U.S. here. It'd be grand theft. Yeah, to start a bank run. Yeah, but I think you're misunderstanding. I mean, it's 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 a regulation in the U.S. to orchestrate a bank run, right? If there is found to be malicious intent behind it, it's actually an SEC violation, and ultimately, if there's enough, well, definitely if there's preponderance of it, the SEC will fine and recommend whatever charges. But if there is malicious intent to cause harm, that's actually a crime that like in the US, like the FBI, well, technically, well, it would be the FBI, but it would be orchestrated under the Secret Service. But the FBI would be the one with the charging document. The case agent will come out of the FBI, and that's illegal. But I mean, there's nothing to say, you know what, I've lost confidence in this bank and I'm going to go pull my damn money out of it and move it to a different bank. There's nothing. I mean, they can try to stall it, and obviously that's what SVB did, but I mean that's not against the law in the U.S. at least. I mean, you're well within your right to do that. So, um, if you set up a Facebook event to start a bank run, yeah, absolutely, yeah. Well, that's what the allegations about SVB are. It was an event orchestrated through WhatsApp. So, yeah, that's where criminal activity could come about because it's an SEC violation. You know, yeah. But anyway, all right. So on dollar, I think we've kind of nipped that in the butt, right? And Euro USD, I'm looking at the very same. What I want to see is, and I took this small little short on Euro USD. I actually took two positions. I got filled on a sell stop, got taken out. Hold on, where is it at? Here we go. I got filled on a sell stop here, had a sell stop here, and had a stop loss just above this high. Got filled on it once we broke the low. I ended up I didn't move my stop loss. All I did was just pay myself the risk. Price ends up coming back and tagging me in, stopping me out on my sell stop, which I didn't care because I was already risk free on it. And as soon as we broke this here, towards the end of the afternoon for me, all I did was reduce my risk and pay myself the risk. So if this ends up going lower, great. I'm trying to take it down into this 50% right here where I want to hedge in another position. So we'll see if we can get into Frankfurt's price action. But it doesn't look like anybody really cares about what's going on in EU at the end of New York because this looks just like garbage price action. But really there's not much that I want to do outside of, I'm not looking for another short on EU. And if this ends up going higher, so be it. Like I said, I was hoping to catch some kind of buy in here. That's what I wanted. But obviously if we're not going to get down there, then it is what it is. And then I'll just wait for whatever manipulation comes out of tomorrow's rate release. That's where I'm going to dive into it. But bigger picture on EU, is this, I mean, nothing's really changed. I've been waiting on this for months to either get up in here or turn this into the redistribution, which I anticipate this is going to be. It's a big old Pac-Man, right? Higher highs, lower lows. It's the old Pac-Man. So I want to get into a position, hopefully, to ride out like the rest of the month with. All right. Oh, hold on. Bear with me. Dude, you look away from your email for 1 second. All of a sudden I got 50 flipping emails, man. All right, cool. All right. So that's kind of my game plan with what I'm doing with EU. On the GU front, now GU, what I'm kind of hoping for is for us to push higher, and I want us to get up. All right, so there's a couple ways I'm looking at GU from a short-sighted view, right? I want us to play above these highs. Oh, geez. I want us to play above these highs and to get into this distribution so that I can short the crap out of this thing. Okay. Now, it's not going to be the highest probability for me because what we are is we are in a 1, 2, and wherever the heck this thing ends up, 3 drive distribution. So my anticipation is that we could honestly run all of this up to the top, right? We can run all of this up. There we go. And do this. All right. So this is one of those where I'm just going to be very patient with this stupid thing. And really, like I said, they've hedged themselves in because what'll happen is they're either going to distribute down or play it up. You know, this is really the perfect play for whoever's orchestrated this for however long it's been orchestrated. You know, you've got really good signs of buyers in this market here, but you got short sellers that are sitting in here. So it's going to be really dependent on what happens tomorrow. You know, and the pound is going to get it twofold, right? The pound is really driven by what pound futures is doing, but you're obviously going to get some kind of manipulation out of tomorrow's FOMC, and then Thursday morning is going to be the big move. When I trade a prop firm challenge, do you still use 0.13% risk on order flow, or will you risk more to pass and then reduce your risk when you have the account? It depends on where I am in the challenge. So if it's the first trade, yeah, I mean, if it's the first 2 or 3 trades that I'm taking on it, sure. And then I'll borrow from profits if that makes sense. So yeah, I trade if I'm taking a challenge, I'm trading a challenge way different than I'm doing a funded account or a personal account. So yeah. All right. So yeah, on GU, this is kind of like how I'm looking at it. You know, you've got a couple of fronts that are in play. You know, I'll tell you this, I'm not going to be looking for buys up here. Do you mind if I DM you and ask you about your approach? Sure. Yeah, bro. That's fine. Yeah, I'm not going to be looking for a buy from up here. So in order for me to buy GU, we've got to take out all of supply that's sitting up here. You're currently in a GU buy to get to that point. Yeah. Or did you get in here? That's where I was trying to get in. That's where I was trying to get in. It was a mess, but you'll show me. All right. Yeah. Unless you got in during Frankfurt. I mean, that's the only other place. I wasn't even looking here though, because this was Monday. But yeah, this is where I wanted us to come. I wanted that. We got the sweep, and I just wanted the damn break, and it never broke. So, but yeah, unless you got in here off of that, that would make sense. Because it does look like it actually. Did it sweep it? It did sweep it. Yeah. Yeah, you did get a good sweep in here. I'm guessing off that 5-minute candle, I'm guessing it comes right to the flipping 80%. Let's see. Actually, it comes below 80%. Comes below. Let's see where you got in. So wait, so you got it in here? Out in New York today? I don't know if I will. Let's see. Hold on. Let's see. Let's see. So what did you do? Just measure this move right here? I don't know if I would have set a limit on that though. I mean, you got a clean reaccumulation. I just don't know if it would have been, if it was worth it for me. How big was that 50 entry? 17 pips. I mean, it is what it is. The play was there, but I would have, for me, this was the entry that I kicked myself for missing, because this happened at 4:10 in the morning on Monday, and I don't wake up early on Mondays. And then by the time I saw it, which was probably around here, right around like 6-ish my time, I was trying to see if she'd come back and pick me up off of this, but no, she had other plans. Yeah, all right, cool. You don't have to DM me, but you're having trouble hitting profit targets on your current risk, but you're profitable. All right. So, I mean, what's your, I mean, what have you done to change what you're doing? Have you increased your lot size, or have you, you know, I mean, here's the easiest way for me to explain how to pass a challenge. Let's say you've got a 100K account, right? And it's just, I've said this probably, I don't know, a couple thousand times at this point. You got to think critically, right? So you got a 100K account, and we're going to do it simple for the math, right? And you risk $125 a trade. All right. And you catch a 1 to 10. So you're up $1,250. And then you lose your next 2 trades, right? So you had one winner, and then you had 2 losers. So you lost $250. So now you're down to 1,000. All right. And then now your third trade, or your fourth, but your third set, instead of risking 125, throw in, I don't know, $200. All right. Risk 200. If you lose that trade, right, now you're down to 800. All right. So now go and let's do your next set. All right. Your fourth trade, you risk another $200. You catch that 1 to 10. So now you're up 2,800. And you're like, okay, I know that the person that finishes with, let's just say you got to make 8%. The person that finishes with $7,999, and the person that finishes with $1 profit, they both got to redo the damn thing. So you're at $2,800, and you're like, well, screw it. I'm going to throw now $500 on this nice trade that I like, and I lose it. All right, boom. So now you're down to $2,300, right? And you say, you know what? I got another accumulation on S&P that I'm going to throw in here, and I'm going to throw another $500, and I catch a 1 to 10 on it. Oh, all right. You just made your 5K, and you're sitting at 70. My bad. You're sitting at 7,300. And now you can say to yourself, all right, you know what? I'm going to throw 250 at the next couple of trades, because I know that if I catch a 1 to 5 or a 1 to 4, I'm done. Boom, I'm done. That's all it is. This is how I pass challenges right here. Borrow from what you got. Just make sure you always leave yourself a buck. Yeah. Measured that last push you circled. Gotcha. Okay. Where did you place the fib there? Where did I place the fib? On what, bro? Place the fib. Place the fib. You mean this one here? Yeah, the last unmitigated part right here, from here to here. So that's what I filled it on. I am increasing my risk on order flow trades to a quarter. Got you, bro. I haven't caught a session where you've talked about this. Yeah, I don't know, bro. I know I've talked about it before. I don't know, man. A lot of these Zooms run in between each other. So, but I have talked about. All right, cool. The first one that you missed off off this London candle right there. Off the London candle. That would have been the ideal one because that would have been a fantastic position. That would have been that would have been a 3.7 pip. And then running it up to this high where I would have partialed out would have been a 1 to 26. So, all right. Anyway, on GU. Yeah, I mean, this is how I'm kind of looking at it. I'm hoping that we get a little more bush to the upside. But I'll tell you right now, if the Fed does not come through with 25 basis points, obviously this is going to be my first point of interest here. And then it's going to be like this here. I don't think we see price coming back down here. I don't. But we may possibly see price come into like the 50% of this move here, if not something here. Right. So on the buy side, that's what I'll be looking for. And on the sell side, if we come in at 25 basis point and if Bank of England comes in with their forecasted, I think the status quo is going to stick. And I think we're just going to continue to see price hopefully work its way down. All right. So EU and GU, that's how I'm kind of seeing it. Now, EG, right? EG, I am looking in this stupid thing. Oh, this stupid thing. I saw the alert go off this morning and I didn't look at it. Bro, I didn't flipping look at it. I remember seeing the damn GU thing. Oh, no, this is going to piss me off when I look at it. Oh, this is going to piss me off. Yep. Oh, yep. I just want to see. I know I didn't get filled on it. I think it missed me by, let's just see. So it would have been sitting around like a 1 to 9. What did it miss me by? Yeah, that's what it missed me by. What is that? 2 pips? Oh, bro, not even a pip. 7 pipettes. All right, so this stupid thing. All right, well, one of two things is going to happen. We're either going to see price get up into this area here where I'm looking for the bigger sell, or this is going to be the top and you're going to see price break the low. So redistributions are going to be what I'm going to be looking to target. We can expect that Fed rates are going to influence EG tomorrow afternoon. You'd be mad when you miss by 2 or 3 pips. Yeah, bro. A secret that I use is always buy when you buy new gaming monitors, always buy the protection plan from Amazon on them or Newegg. That way, when you break them, there's no questions asked. They just send you a gift card for a new one. All right. The ECB does have more hawkish policy than the Bank of England. It doesn't matter though, because the ECB will get trumped by the Fed. So that's why, as long as the Fed continues its hawkish tone, EG is going to go down. Does that make sense? Yeah. Now, I'm right there with you. If we start to see the Fed wavering and pausing, I'm right there with you. EG is going to skyrocket 100%. But right now, like all of this, if we go out, like if we look at all of this in here, because realistically, just think of it like this: in all of this distribution, the entire year, ECB has been way more vocal about fighting inflation, about taking monetary measures in ensuring that inflation gets under control, all this stuff, way more, right? But what's been the reason that this thing hasn't just skyrocketed? It's been the Fed, and it's been what is weighing down the euro. It's the dollar. So I'm right there with you though. If the minute like the sharks in the water smell blood, right? The minute they get an inkling of the Fed um easing, right? Because the Fed's been just on a tightening fiasco this entire year. If we see that easing, that's it. I'm right there with you. EG's bullish. Um, yeah. Do you mind showing how you enter on redistros? Uh, just play the mitigation. Wait for the redistro, right? It's got to have manipulation, so it needs to have this shakeout. And just I'm setting limits off the shakeout. So I'm either going to measure the whole redistro or I'm going to measure the specific cause of that shakeout, that buy to sell. What makes you break monitors? What makes me break a monitor? Having a limit there for 6 weeks and then thinking you're in the trade and you look and it's missed you by 2 pipettes, and it was a potential trade that would be high 5 figures at that point. Man, that'll cause me to break a monitor or throw the phone in the pool. Or yeah, I've got a big old punching bag in the garage. Yeah, there's definitely good reasons, man. Um, for people with anger management problems like ourselves, I find it difficult to manage my emotions when trading at times. Oh no, I mean, I definitely I can control them. I just it is it is my punching bag, if you will. Like I do it very easily. So, yep. COT reports big boys have been massively net long on euro for a while now. Yeah, but I guess the question is, are they net long on euro futures? Are they net long on euro bonds? Or are they net long on US bonds? Because I think right now the bond market is where everything's at. I mean, that's my one, I mean, I guess we'll find out. I mean, if they're bullish, then this thing should go higher. But for me, this is looking massively um bearish driven, short seller driven. So, I mean, but we'll see. We'll see how she ends up playing out. Um, let's see. Uh, bu- 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 what's your thoughts when the Fed and wait, what's my thoughts with easing or tightening? Do you think they will continue tightening? Um, I mean, right now, I have no reason to suspect they're not going to, right? They've got to continue tightening. So the question is, do they want to truly fight inflation? If they do, they're going to continue tightening. So you got to ask yourself, like, what's their priority? The only reason they would go into easing is for one of two reasons: inflation's under control, or to protect the structural integrity of the banking system. I think at this point, confidence has been restored, and the larger banks have already gone out of their way to instill that confidence. So I don't see a reason for them to ease. I mean, that's just how I'm looking at it. Speaking of that, what did the 2-year and 10-year do today? I don't know. I mean, I know I saw the 2-year at like 4.175, I thought. Let's see. Oh, 4.140. Yeah, I mean, where's the 10-year at? 10-year still at 3.6. I mean, yeah, I don't see, man, I don't see a reason to give to, I mean, I'll tell you this, like, why on the 2-year, does anybody, why did this happen? Anybody know? Why did that happen? Anybody know? Yeah. The SVP had to sell their freaking bond yields, right? They had to cover freaking withdrawals. So do you think they wanted to sell it at like 60% off of what they, or 60% drawdown of what they freaking purchased them at? Hell no. But you had a significant amount. Yeah. I mean, I think I mean, nothing about the bond yield is really telling me that this is going to give up. I mean, I feel like they're still going to freaking, I mean, I potentially see this going higher. I'll tell you right now, if the Fed comes in fact with 25 basis points, yeah, we're going to see within the next 2 to 3 weeks, you'll see the 2-year above whatever this point is. Whatever that point is, I mean, and then on the 10-year, I mean, I don't put it past us getting above this 4.33. Where's a 6 month at? I mean, look at the 6 month. Nothing about this is breeding any kind of, nothing is breeding. Everyone's saying they topped. I mean, this is the one thing I would say, right? Like what creates this to trade higher, right? And it's a culmination of, it starts with the rates, right? As as rates increase, so do the potential for bond yields. But more importantly, it's all based off supply and demand. And like right now, you've got to be, I mean, you tell me anything else that you can today go in and buy a 6 month bond and get it at 4 I mean, let's just call it what it is, 5% over 6 months. What else is there that is going to get that? So I mean, like, why wouldn't you continue to just keep buying up bonds? Now I think there's going to be a shift if we start to see the Fed easing on, their most recent policies. But as of right now, I don't see that. I don't see a reason for them to go from how quickly, and again, remember, like the Fed was short to react, right? The Fed's been criticized multiple times about their lax reaction and how late they came to the game. But I mean, they've definitely been overhauling what their attack plan is on inflation. I'll say this: as inflation continues to skyrocket, we start to see another 0.4 to like 0.5, maybe even 0.6 month over month. this is going to continue to go up because there's still going to be those fears. You're still going to get the tightening. We're still in contraction. There's not going to be a reason for the economy to expand. I think bonds is where it's going to be at. If something were to break due to high interest rates, do you have an opinion on what it might be? What do you mean something would break? Like what? The banking systems was going to break because of high interest rates. Mm, no, I mean, I guess you've got to. So, I mean, this is a deep economic discussion, but I don't know what you mean by something will break. I mean, just think of the cycle. So everything rate related banks will increase on. So, you know, mortgage rates, loans, I mean, everything is going to see an increase, but I mean, we're sitting at 5% on a Fed funds rate. That ain't high. I mean, realistically, that's low. 5% on the Fed funds rate. I mean, that we've been much higher than that. I mean, I remember early in my adulthood, we were sitting at something like 8-9%. So 5% is nowhere at its peak. And I mean, and you go back to the early 80s and late 70s. I mean, we were seeing Fed funds rates, almost double digits. Um, This is the expectations now of the markets. The expectations now of the market. Let's see. I don't know, bro. Why is it not showing? There we go. Let's see. Yeah. So, I mean, just put this ticker up. There's a ticker on TradingView that you can follow on this. Yeah. So let's see. So as of right now, they're expecting, what is it? Um, so these groups, wait. So everything here is expecting under 5%. And then you've only got three that are looking to go, what, maybe like 5.3 or something like that high. Yeah. I mean, we'll see. This is all great, but inflation is going to cast the shadow on what really is going to happen. Because as of right now, I mean, inflation is nowhere near under control. But yeah, there's an actual ticker. I've got it on my notepad on my iPad, but there's an actual ticker on the Fed funds rate that you can actually follow. Yeah. Um, would you mind telling me why did you choose the London candle in GU to place the fib on? Because it's where the manipulation came in. Cuts to come in early next year. Most people cheering for, but if they do need to mean something is properly broken, well, the cuts would mean that the labor market's taking a hit. Yeah. So, but again, like I mean, I don't know. I'm not going to put too much into this because what the expectation is then that somewhere around well, they're talking about somewhere around here, right? This is where it starts to come down. Somewhere around here is where unemployment starts to skyrocket and they need to cut rates. Because the only reason that they're going to cut rates is to um, bring back the labor market from its high unemployment. So what the expectation here is that from, we'll call it maybe like the fall of 2023 to the fall of 2024, they're calling for significant unemployment. And yeah, I mean, we'll see. I'll tell you this, I don't put a lot of my personal belief into a lot of this crap, because it's like the weatherman. You know what I mean? I've never met a meteorologist that can actually accurately tell me when it's going to rain, when it's going to stop, where the storm is going. Because have you ever seen this? This reminds me of spaghetti freaking strings on a hurricane map, but yeah, that's kind of my thought process on it. All right, let me catch up. But I do agree with you. When they start cutting the rate, it's because the labor market has taken a hit. So if they lower rates, do you think inflation will rise? So just look up what the economic cycle is. Inflation, we're always going to have an inflation problem in a cycle. So inflation goes up, they raise the rates, right? Inflation goes back to normal, labor market takes a hit, unemployment rises. They lower the rates because of the unemployment market. And now, obviously, a lot more other stuff is going on, but they lower the rates to bring back expansion into the economy so that people can get back to work. And then for a little bit, everything is great, right? Unemployment's low, hourly earnings are high, and then all of a sudden we have to deal with inflation again, because things were great for a period of time. Things were so great that inflation occurs, and now what do we have to do? The cycle all over again, right? Raise the rates, contract the economy, slow it down, unemployment hits a high, we start reducing the rates again. So it's just a cycle, right? It's a cycle. From history, what comes after the first rate cut is not pretty for stocks. Yeah, no, absolutely. I mean, so yeah, I mean, it's when it comes to the cycles, I mean, that's the easy stuff. You'll know because it's history repeats itself. That's why when they were talking about a soft landing and no recession, never in the history has that happened. So yeah, yep, I agree. We're still seeing layoffs too. Amazon laid off like 9,000 people the other day. Well, yeah, I mean, absolutely. Absolutely. Is QT the same thing as interest rates? Is QT, no, quantitative tightening. So quantitative tightening, quantitative easing, those are just the monetary, like the policies that they're instilling. So yeah, I mean, that would take like a very long discussion. Just Google it, bro. It's you'll get a better idea. Just Google QE and QT. Right now, what the Fed is doing right now is QT. All right. What they were doing post COVID was QE, right? So yeah, just Google it. Yeah. You like the way I explain it? Yeah, man. But bro, we'll be here all day on a QE and QT freaking speech, bro. That's a very long discussion. But yeah. How does that correlate? What do you mean? Well, okay, so when they're raising rates, they're tightening. It's one part of it is they're tightening, and then when they're reducing rates, they're easing. But there's a whole lot more that goes into that. So, but you're in a QE cycle when rates are being reduced. All right. Let's get back to this, bro, because I need to get off. I need to eat something soon. So, all right. On the NU front and AU front, right? I am still most definitely looking at, there we go. I am still most definitely looking at potential shorts. And as of right now, what I am anticipating is I'm not anticipating a sweep of highs on NU. I am on AU, right? I feel like NU is going to be the leader here. So the expectation for me on something like NU is exactly this. I'm waiting for this break. I'm waiting for the break, and then I'm going to play mitigation of the break on a redistribution. I'm not envisioning a manipulation on NU, but I will be expecting one on AU. And this stupid thing just does not want to do it for me. You can kind of see the thought. There's two ways that I'm getting into an AU short, right? It's this right here. I'm hopefully expecting, maybe we get, I think it's going to be a little far-fetched for me to anticipate this now, but I want to see a sweep of this to confirm a type 1 for me here. But if that doesn't happen, right, the expectation is that this turns into a massive redistribution. So crypto, what about crypto, bro? I mean, I'm not a big day trader on crypto, so I'll invest in it. I'll support certain projects that I'm passionate about. But I mean, if you're asking me, am I personally buying Bitcoin right now? No, I'm not. Yeah, Bitcoin's coming lower, man. We won't see right now. We're still in a crypto winter. We're not going to see a bullish BTC until we get closer to the halving. So yeah. Yeah, I'm not interested in dollar cost averaging because there's no point in it for me. I'd rather wait for us to get to the area where I want to start buying, which is going to be under. I mean, I've got a couple orders under 12K, but for the significant orders that I have, they're sitting between 7 and 8,500. So I can care less about, and just be mindful of the projects that you are DCAing on. um, I have no desire to DCA on any real big Ethereum blockchain coin. Everything I'm looking at is things like Bitcoin. You guys know I'm bullish as crap on Flux. I'm personally not buying Flux. I'm not buying Cadena just because I'm mining the crap out of them. Things like Caspa, I'm mining those. So I'm not purchasing those, but I'm definitely looking, to continue to increase my portfolio on those. You've been DCAing since 16K and we're at 28K. Yeah. And what happens when it goes to 14K then? What are you going to do? You're going to, you got your sell orders? Where are you selling from? So you're not DCAing it if you got sell orders. You're not going to, yeah. I got in what, at 3,600. I bought a bunch. And when we broke, what was it? Like, I think it was like 54 or 52. I told everybody way back then that I'm moving everything to stable coins. And that's what I did. Yeah. Trailing stop loss. Oh yeah. All right. I'm not trading them, bro. So you got it. Have at it, man. That for me is just way too much work. On AU, would you be looking to try and get in on the redistribution targeting the lows or just wait for the low? So it depends honestly on if yes, the answer is yes, I will, but I need manipulation. And right now we ain't got nothing. I mean, there's zero manipulation for me to get in on, you know? So until I see a manipulation for me to mitigate off of, I'm not going to do anything with it. And even something like this, like, okay, well, what if we break this, right? Because this is our high and this is the previous high. And at that point, what am I going to try to sell? What to here to catch, 30 pips? That's not something I want to play. So I'd rather wait for this break and then try to play whether or not we come back into the distro, something along those lines. Yeah. Yeah. Did I go over EU? Yeah, bro. EU was very beginning. So yeah, AU and NU, I'm still maintaining shorts. I mean, these things have been selling off for a very long time. And on UCAD, same thoughts on GU. You have the same thoughts on GU? Or am I? Yeah, I already did GU, but yeah, I'm looking for shorts. But I'm waiting for it to go a little higher. All right, so on UCAD, right? This is what I wanted to see last week, and she's just not giving me anything, man. Like, I'm not interested in trying to play this at all. Um, I'm not. Now, this will be something I'll look to play because right now we're still in active distribution and we got our creek. So until we confirm, I'm not going to be looking to play out of anything here. I'd rather see this come lower, and if we can get it to come lower, great. If not, I'm going to need it to break. So, I'll take an aggressive entry if we break this high. I'll start setting limits when this alert goes off. Right. So, and that's only about 100. We're about 150 pips away from confirming the overall reaccumulation, but there's nothing, right? 150, 146. I was close. There's nothing on UCAD that's telling me bearishness. So I'm looking to short this bad boy. I'm sorry, I'm looking along this bad boy as soon as I get confirmations. So for me, UCAD's going to be simple, and I'm going to be trying to target this high up here. This is what I want to take out, this high up here. So, we've been looking. I mean, overall, what's it been? It's been about 450 pips that I've been just looking along out of this. So as soon as it gives me something else to get into, I'm looking to buy it. Right. That's how I'm going to be playing it. So I like UCAD longs, and obviously New York price action from today looked pretty damn good. I like the manipulation that it gave, right? We have the accumulation, and we definitely have the manipulation. So that's what I want us to come back into. But in order for me to do that, we need to at least break what's maintaining the bearish leg here. All right. And all right, so that's UCAD. ACAD and NCAD, I'm going to be shorting as well. And there we go. All right. So I'm going to be shorting as well on these bad boys. And what I'm going to be looking for is I want us to get up into this price action. I've got my alert sitting at like 91.70. We're 30 pips or so from that. That's where I want us to get up to. I'm more interested probably in trying to catch AU and an NU than ACAD and NCAD. I have a feeling that this thing's going to be just a long, drawn out redistribution. But I'm going to be looking for an aggressive play on these just because these things are massively bearish, right? So, we've got a little bit of divergence between NCAD and ACAD, right? If you look over at NCAD, right, NCAD's already made the low. So what I'm going to be looking for, and what I was looking at today, was I really wanted to get into this price action. So I still think we can get up here. But this is as of right now, this is where I want to see us come back into, is up here. But if this thing just continues to free fall, it's going to be, wait for the manipulation. So, maybe we get something like this, and then I'll play back into it. Maybe we get something here that gives us a sweep at Frankfurt, and then that causes the break, and then I'll play to mitigate Frankfurt. Either way, I want to play continuation move, or I want to pull back. But as of right now, the only real areas I want to play into are going to be up here. This honestly just looks like a lot of low volume. So I'll be patient with it. I'm still holding a ton of NCAD shorts. So I'll just continue to hold these damn things. I mean, it's not costing me a significant amount in swap fees. So, I'll continue to hold them. But that's NCAD. And then I do have some yen crosses that I am looking at, right? Hopefully everybody's look at yen futures already. What I am looking for is I'm looking for this short on UJ. And I'm going to be looking for the short on UJ out of this price action right here. This London price action is where I want us to get into. So ideally, I want this to continue to pump. And then, I've got my alert just below 134. Really anything in this here is where I'm going to start looking for the shorts on UJ. And like 34,500 would be a nice little area, but somewhere in here, there's a lot of confluence. 80% of the whole redistro is 50% of the UTAD in here. So that's something I'm looking at for UJ shorts. Now we do have a different, so obviously you can see London takes out previous New York on UJ. If you come over here to CADJ, there we go. If you come over here to CADJ, you'll see that on CADJ, London does not sweep it out. And on CADJ, this is exactly what I'm looking at. Same thing, right? I'm looking for us to come up into that 80% of the previous redistro, or I'll even entertain, depending, and this is something I was looking at today to see if we were going to get manipulation at Canadian news coming into here. This is still on the table for me. I'll still look for something out of here. And the reason I'll do it more on CADJ than on UJ is because CADJ, I know the damn Canadian dollar is way more bearish than what the US dollar is, slinging out. So I'll take the aggressive entry on CADJ, so anything around like that 97.20 level is where I'm going to be first looking. And then of course, anything up here around like 98.15, that's where I really want to get into a position. And targets are going to be for me, below this like 94,600 level. So I do like CADJ on it. And then the other yen cross that I've got on here that I'm watching is going to be EJ. And on EJ, pretty much the same exact thing, right? I'm going to be looking to play strictly out of this specific price action. I like the accumulation. I feel like we can get a little more of a distinct seller direction out of this to then target and make a new low. So I'll be honest, these two are going to be my main priority. EJ is just going to be one of those of opportunity. If it's there, it's there. But I would prefer CADJ or UJ is going to be my two preferences. All right. So currency wise, that's what I'm looking at. All right. And then on the indice front, I mean, indices are going to be for me, let's see. Indices for me are going to be nothing's changed, right? I did catch a small little short out of here this morning. I think it was like a 1 to 9, 1 to 8 is where I was at with it. I'm still waiting for us. I feel like this alert's been up here for a very long time. I'm still holding shorts out of this, and I'm hoping that we can come back up here, right? I'm hoping that it can come back up here. There was a pretty decent little buy opportunity last week. I'm sorry, not last week, yesterday, right? Was this yesterday? Monday? Yeah, Monday. There was a nice little buy opportunity out of Monday, just to get it up into the area where I wanted to hedge some sells. But this is where I'm still very, very much excited about trying to catch my next short. And on SPX, like I said, on the future side, right? Future side, she's already blasted through that area. Yeah, there you go. But we're still in that area right here. And then this was that Monday position. Pretty much this is what I was looking at. I either wanted the reaccumulation or I wanted us to come back into just previous demand, which that's where she came into. And I think it was, when I looked at it earlier, it was like 112 points, but what's she at now? 129. So it's 129 points up from that. So I'm still very much long-term bearish, right? I mean, when we think about this is what's maintaining this bearish leg, I'm still very much bearish on this. And at this point, I'm not trying to buy from up here. So if it gives me opportunities to short on SPX or US 30, I'll take it. I'm personally not going to be doing anything. Was your entry on US 30 off the 50 of the distribution at the top? You talking about up here on this? Oh, wait, you're talking about US 30? Yeah, which top are you talking about? You talking about this one here? Today's? Yeah. I took it off the distro. Yeah. Yeah. Took it right there, bro. Yeah, that was it. So, yep. Yeah. Do gold? Yeah, I mean, we can look at it out. I don't think there's much for me to do with gold, bro. Let's see. I don't remember the last time I even marked this up. Let's see. Let's see. I mean, this is the slingshot that caused all-time highs. And you have, I mean, you definitely have buyers that have come into it. Your bearish order flow from here, and you've got no signs. I mean, this right here is showing me no signs of weakness, no signs of sellers. So yeah, I mean, there's no signs of sellers in this. What's silver done? So I mean, silver is a different animal, man. Look at that. Silver, I'd be looking for shorts on silver. I'd be looking for shorts on silver. Plainly out of the distro. I mean, there's definitely some good shorts in that. But gold's a different animal, man. I don't see a sell position that I would want to take on this. When was this? Wednesday the 15th. Yeah, I mean, your break was here. Your break was here. You got your accumulation. You've got your mitigation with low ass volume. Yeah, I mean, yeah. What, I mean, unless you got something that's clean, what part of this looks clean? Um, you feel with stagflation coming, gold is the play, generally where it performs best. Looking for a buy from reaccumulation. Yeah, I mean, the only issue I have with this, and I mean, for me, this is what's maintaining your current order flow. So yes, but when you look at, well, what did that reaccumulation do? I mean, the question is, was this ugly piece of price action the cause of the break, or was it this? I would more be inclined to say that that was the buy orders that caused that break. So I mean, for me, it's the rightful point of interest, but man, it looks ugly as crap. Yeah. Short gold when silver hits your POI on distro. Yeah, but there's a difference to why. So gold is not being treated as a precious metal, right? Gold is being treated as a safe haven right now because of all this crap. Silver is not a safe haven, right? Silver is a metal. So that's why, I mean, commodities in general. I mean, have you seen oil? I mean, oil has been just like falling off the freaking out of the sky. So commodities are falling off. Gold is being propped up just because of the safe haven part of it. So I would be, yeah, I mean, I won't spend too much time on it because I can say bullish, 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 but I'll tell you right now, the Fed comes in tomorrow and Powell gets up there and he smirks and he says, I told you to believe me that I was hawkish. And he said, and he throws out there that, they're going to be raising the rates 50 basis points. You know, don't hold your breath on that holding any kind of buy because this thing is just going to free fall. You know what I mean? So, because it's not being traded as a commodity currently. It's being traded as a safe haven. Yeah. Um, yeah, yeah, absolutely. Absolutely. Depends on the dollar, bro. I agree. You got it, man. Yeah. Yeah. No, I'm definitely, I'll tell you this. If you do not watch the press conference, I would definitely encourage you to, because especially it once you have a basic understanding for the economic standpoint, you'll start and this is something I do. I have my charts in front of me. I'll have like, the Dow up or the S&P, I'll have the dollar index, right? And I'll sit there and I'll listen to the speech and I'll look to see how they react, and you'll really start to see how keywords really influx what the market's going to be doing. So, it's yeah, tomorrow's going to be fun. Like I said, this is why I'm not even, I thought about waking up early in the morning for London and I was like, but why? Why go through all that work and stuff when just let the market manipulate, at the rate release and then pick up the pieces after. So, but yeah, we'll see how it plays out. Yeah, cool. Cool. All right. Well, listen, anybody else have any last minute things? I told my wife I'd be off at 8:15. So I'm a half an hour late, actually almost 45 minutes, but, um, anyone else have any quick little questions? If not, I'm going to call it a night, man. You got it. You got it. Absolutely. Cool. Awesome. Well, listen, enjoy. I'll catch everybody later. Have a great one.